Hey everyone, Unity Software reported second quarter earnings results that I'm going to review in this video. I'm also going to update my recommendation of Unity Software stock. Coming into this earnings report, I did not have the stock rated as a buy. I had it rated as a hold. So you're going to want to tune in to see if I'm updating that recommendation. So let's get right into it, starting with the review. Total revenue increased by 11% to 533 million. Now, this was on a pro forma basis, including the results from its acquisition of Iron Source. Net loss improved to 193 million from 204 million in the same quarter the prior year. I really like to see this from growth companies. When they increase their revenue, they also make progress on the bottom line, getting closer to profitability. As I often say, I'm okay with growth companies losing money on the bottom line so long as they're making progress towards profitability. I don't like to see revenue grow and profits worsen. Net dollar expansion rate, which I'll talk about a lot more later on in the video, decreased for the seventh straight quarter to 106%. This metric peaked at 142%. I look at this as a critically important metric when I'm looking at software companies and companies that have recurring revenue, because this demonstrates to me what existing customers are doing with the company. Any figure over 100% means that existing customers are increasing their spending year over year. So 106% would mean that a company that spent $100 with you in 2022 spent $106 with you in 2023. And why would companies increase their spending with you? Well, they would only increase their spending with you if they feel like they're getting a good value for their money. So when I see this figure increasing, it shows me that their customers are getting good value and continue increasing their spending, which is a great indicator for long-term performance. Now, I like that the figure was above 100%, but what's concerning to me is that this figure continues dropping for Unity Software. Now, they had issues with their software not working properly, and that's partly why they made that acquisition for Iron Source to solve a problem they were having, and hopefully that fixes the issue. But it remains to be seen because we're not seeing it just yet in the net dollar expansion. Cash flow from operations improved impressively to 47.6 million. This was up from a negative 42.8 million in the prior year. The company's made enhancements to the business, reduced its office footprint, increased pricing, which is making it better for them in terms of generating cash flow, and it showed here in this quarter. Impressive boost here in terms of cash flow from operations. Management is forecasting third quarter revenue growth of 8%, so the revenue growth is decelerating from the previous quarter, which I found to be disheartening as well, considering some of the exciting announcements the company made regarding their AI programs that they're offering game developers. I thought these were going to be very lucrative and very profitable for the company. Maybe they're not yet fully implementable, and that's why they're not seeing that boost in revenue just yet. But if they're able to execute the things that they talked about in the conference call, I think that that's incredibly valuable for game developers. It could save developers so much time in writing code to make certain things if what the large language models and if the way the engagement with the platform is the way that management described it. I think it could be very lucrative, but I didn't see that yet in not only in this quarter's results with growth of just 11%, but I'm also not seeing it in the forecast, which is forecasting growth of just 8%, right? So you would have seen a big boost, but it may come a little bit later. So let's be patient here and let's give Unity Software time to implement these innovative AI solutions into its platform. Now, I mentioned I was going to show you the net dollar retention rate, and here you see the chart of Unity Software's net dollar retention rate and the number of customers spending over 100,000 with the company. So the net dollar expansion rate peaked in the third quarter of 2021 at 142%, and it's been steadily falling ever since to 140, 135, 121, 111. It had a slight uptick to 116, but then down to 106, 107, and now 106 in the most recent quarter. So I would like to see this mediate and slow down, at least reverse and increase and accelerate, and not continue this downward trend, which is troubling as an investor when you're looking at this, because it shows that their customers are not getting as good of a return on their investment spending with Unity software, and thereby they're not increasing their investment by as much as they were previously. But remember, over 100% is still good, because that means existing customers are spending more with you year over year. You would just like to see it be back to or getting closer to those levels of 142% they had a couple of years ago. Now, we may not ever get back to that higher level, but at least, approach it or stop the declines would be very good for investors. Now, to update my recommendation for Unity software stock, I'm keeping it rated as a hold, but I'm keeping a close eye on it because I really, really like the AI innovations they announced in their transcript. I want to see that start to come to fruition from Unity software, and I wouldn't be surprised if they're able to implement that if I don't upgrade this stock in the very near future. But for now, I'm keeping it as a hold. I want to see evidence of the AI innovation going into the marketplace and starting to generate revenue. All right, but an exciting quarter for Unity software to be sure. But that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.